All right, so tax season is upon us. We're getting ready to end the year, and December is a big month around preparing for and making some of the biggest decisions you're going to make in your financial future out there. And part of that is going to be tax loss harvesting and some of those things that will apply and save you maybe tens of thousands, if not thousands, if hundreds, depending on your digital asset portfolio out there. But we're going to dive into that today. I think you guys are going to love it. My name is Paul Barrow. Welcome back into Tech Path. This is one of the topics that I get asked about often is strategic planning for crypto portfolios. And one of the things around strategic planning outside of knowing what kind of tokens to invest in, how to balance your portfolio, what kinds of diversification you should be looking at is taxes. And how do you prepare for it? How do you get ready to basically take advantage of it? So we're going to dive into all that. And joining me today is David Kemmerer, who comes over from CoinLedger. So CoinLedger, formerly known as CryptoTrader.tax. So great to have you back, David.
Yeah, thanks for having me back on, Paul.
All right, so David, it's been about a year since we've talked. Tax season is upon us again. And obviously the big question this year, more so even though than last year at this time, is a lot more losses in the game. And people now starting to strategically manage their portfolios a bit differently. And some of the things that we'll get into is going to be tax loss harvesting and all that good stuff. Before we get going, I want to learn a little bit more about CoinLedger. And since you guys have kind of come on, you're obviously, full disclosure, CoinLedger is a sponsor of this episode, and they also sponsor our channel. And we're going to do a whole series for you guys on this. But CoinLedger as a product right now, you guys, first of all, you made the big brand move. What was the biggest feature sets that came out in this version of what you guys have now?
Yeah, so it's at its core the same product. So as you mentioned, we rebranded the business away from CryptoTrader.tax to
Right.
CoinLedger. That's just a long-term play and where we want to take the business from a product perspective. Long term, we're not going to be known as purely a tax company. We're also going to
Right.
move into portfolio management, recommendations, just helping people with their financial lives. And CoinLedger, we believe is a stronger brand in the long time to do that. But to your point, things that came with that new product suite that launched kind of at tail end of last spring are full new user interface to the product, making everything a lot, let's just say, less clicks to get from importing your transactions to a complete and full tax report that you can send to your accountant or import into platforms like TurboTax to get your taxes done,
Yeah.
as well as dozens and dozens of new integrations with blockchains, wallets, additional exchanges, support for things like NFTs, deeper DeFi support. So it's a lot more of doing the same thing in easier, simpler fashions.
I'm looking at, so I want to go over to your website here, and a lot of
Mhm.
things that I think, first of all, new website, so congrats on that. Tons of integrations you guys have now. You've got portfolio tracking, which is something that I think is another tool set. And this is something that I like, is that you guys are consolidating a lot of different tools that have been out in the industry, kind of out there in just they're not really products, they're features. And you've started to dovetail those into an encompassing product. So I think that's cool. So free portfolio tracking. You guys are a TurboTax partner now. You can handle international as well. I was looking at just some of the reports that you guys are doing. So you got the gains report, the harvesting report, which we'll talk about today, the 8949, which is the crypto tax report that everybody knows if they're in the industry. Then the income report, the Tax Act direct import. I don't know this. What is that? That one's
Mhm.
new.
Yeah, yeah. So we essentially integrate with a lot of the e-filing companies that a lot of consumers use to actually file all of their
Okay.
taxes, their W-2s, 1099s. So the TurboTax is the big gorilla in this space, but there's a bunch of other companies that compete with TurboTax, like Tax Act, H&R
Right.
Block Digital, Tax
Okay.
Slayer. our reports can be imported into all of those platforms
Okay,
too.
so
So
it's
it's kind of
just
like no matter how you finish your taxes at the year end, CoinLedger can support you kind of in that journey.
okay. Audit trail I like. You get into, obviously the IRS 8949, so you guys, it's pretty easy to get going there. This can get a little bit radical, I've noticed, and depending on how many assets you hold. And this is going to be interesting to see this year, I think, with a lot of people taking
Mm-hmm.
losses. And then you've got short and long-term gains report, which is good. The income report, another good one. How are you managing? This is something that we've talked about with some other advisors on a series that we're doing here on the show. And managing these transfers in and out of things like Ledger. Okay, I'm in an exchange for whatever reason. We go to self-custody. Everybody knows why. Everybody's pushing it over to self-custody, and in some cases, it might pick it up as a sale that Bitcoin has moved because it's going from one wallet to another, and vice versa, from a ledger back over to maybe an exchange, and it's not being sold; it's just being parked. Does CoinLedger, are you able to kind of decipher those kinds of transactions and no problems on those transfers?
Yeah, exactly. So that's, one of the big challenges that people face in this space. The way CoinLedger works is any wallet transfer. Let's say we
Yeah.
pick up, as you mentioned, that we detect a deposit on your ledger that was from maybe your Binance account. We're by default treating that as a self wallet transfer, which is, of
Okay.
course, not taxable. So we're not treating it
Right.
as a sale. Now, let's say one of those deposits to your ledger was something different. It wasn't a self wallet transfer. Then you're going to want to mark it. Let's say it was like staking rewards.
Mm-hmm.
You're going to want
Yeah.
to mark those with our bulk tools as like staking rewards so that we can treat it appropriately. But as you know, 90% of transfers are just that, self wallet transfers. So
Right.
CoinLedger
Right.
is automatically, classifying those as self wallet transfers so that you're not having
Okay.
to unmark things, etc.
I like that. Well, and of course, you can do that within the software platform. Very intuitive around that. What about this whole aspect around airdrops? Gifting has been a big deal this year. Uh, Donations, people utilizing crypto as donation tool sets. Sometimes even we do things where we'll open up our wallet for receiving like tips, so to speak. How is that looked at when it's being imported in? Because you get several wallets out there that might be bringing that in. How do you guys address it? I know how the IRS is starting to look at this, but how do you guys track it in there? Is it somehow subsetted away from the traditional trading activities that you're doing in your accounts?
Yeah, so obviously, if let's go through an example. If you get a gift from someone, when CoinLedger imports that transaction history, whether it's from Coinbase or Ledger, wherever you're receiving that gift, it will be entered into your CoinLedger account as just a deposit, right? Because
Okay.
there's no way for the software to
To
know
know,
what
yeah.
was the intent of that deposit. So then you as the user, just in our UI, mark it as this was a gift
Gift.
or this was a donation that I made. And once you mark it appropriately, the software will handle it from a tax reporting perspective correctly.
Gotcha. Okay, cool. That's some
But there
interesting.
will always be some level of manual input
Yeah.
because, again, we don't know what that deposit necessarily was. And so, again, we default it to a self wallet transfer because that's what most are. But as
Yeah.
you mentioned, some are not. And you, the user, will have to mark that in the UI as, hey, no, this was a gift that I sent to my friend.
All right, so I'm gonna hit on a couple news things because this kind of validates a lot of what we're talking about today. This was a piece from Bitcoin.com. People saving thousands in taxes now doing harvesting of NFT losses, and I want to get into that. CoinLedger, you guys are doing a little bit around this, and this goes into your meme platform. We're going to discuss and dive in deep. But I want to get back to the topic of this issue, and that is around NFTs. NFTs right now, the biggest challenge is liquidity. If I've got these random NFTs that I bought for $1,000 on OpenSea, now I'm trying to go into the market, I can't really get rid of them. what's the process that you guys have seen, and have you done anything to kind of help in that area?
Yeah, you're exactly right. It's kind of this perfect storm that happened in 2022 from a tax savings perspective that we find ourselves in today. Because in the early 2022, markets were hot, Ethereum's making
Right.
all-time highs. NFTs are hot. And so what's happening is if you spent Ethereum to buy an NFT or some number of NFTs, you have some cost basis in those
Mm-hmm.
NFTs, right? Let's say you spent zero point 0.2 ETH to buy an NFT. Well, maybe back in the spring that was worth $1,000 of Ethereum. And so you have $1,000 of basis in that NFT. Flash forward to December 2022, and many NFTs have lost a lot of value. Well, users have the opportunity to harvest those losses in those NFTs. And as
Okay.
you mentioned, for a lot of NFTs, they don't have much liquidity, meaning there's not many buyers for them. So users have actually a difficult time realizing those capital losses. And
Mm-hmm.
so we launched the fun meme product, which is a smart contract that our team developed that will buy any NFT from you for a de minimis amount of Ethereum, which will allow you to realize your capital losses. So people are literally saving thousands of dollars by using this. Now, keep in mind, you should not sell us any NFTs that you are bullish on in the future, right? That you
Right.
actually want to hold. This is a great product for, rug pulls, scam tokens, things that like really aren't going to have
Yeah.
value. There's a lot of them out there and there's no liquidity. So this smart contract will help users, harvest these losses. Hundreds of people have already sold their NFTs to it. And so it's a fun product that's going to reduce your taxes.
Yeah, I bet the IRS just loves you guys.
Exactly.
Because that that
We're
is a
looking out for the
hack
users.
that is a hack among hacks. When
Right.
you think about the process here, and who knew, think about developing smart contracts to be able to essentially take that and put a burn system in place for rug pulls and a lot of these
Exactly.
kinds of models, which is good for the overall market. But I don't think the IRS is, because they're probably thinking, hey, we're gonna get a chance
Right.
here to we've got all this in losses that we may never experience. I was looking at this article right here. Cryptocurrency investors now losses are being turned into IRS gains, and one of the things that they play on here is that because of this year, that there's so much in terms of losses is that this is actually opening up the IRS with identifying taxpayers who are in the space. So because now
Mhm.
taxpayers are taking the loss, maybe they didn't take the gains. No, we're not giving anybody any recommendations on always do your taxes, always pay your taxes. But those are the kind of things that are happening now. Is that the IRS has this opening kind of where they're going to see a lot of tax losses coming in this year, and
Right.
people coming in with losses that they never had in gains. Granted, some of these are truly legit. I would say 90% or more. But again, it just opens up the whole situation of the IRS of now understanding you're a
Yeah,
crypto investor.
exactly. There's huge opportunity again in this situation for investors to save a lot of money on taxes because of the dynamics of the market of this year. Again,
Right,
we had a
right.
hot market to the start of the year, which means a lot of people actually probably realized capital gains for the first part of the year.
Mm-hmm.
And now we're here, the market has corrected a huge amount. And so the investor can go and sell, harvest losses to offset all of those gains and likely get a net capital loss, which is going to dramatically reduce your taxes. So
Yeah,
everyone would be very smart to do this before the end of December because of the dynamics of the market where you as a cryptocurrency person may have gains you didn't realize because you were selling trading in the early parts of the year and thus realizing capital gains. You should
right.
go and offset those gains with any losses that are currently in your portfolio.
Yeah, and this is something that comes up a lot on the show. We've had so many questions on this. This further in that market watch piece right here, it says for now, there's no wash sale rule when it comes to crypto, so that doesn't spur these wash trading requirements, which is another advantage for some people who maybe are on the bubble. Maybe they bought a $25,000 Bitcoin and they're thinking, I'm going to take that loss now, come back in and buy it at 16K, rebuy it in January, go ahead and yield that $9,000 loss, be able to use that against my earned income, which obviously reduces my tax bill at the end of the year, which is I mean,
You're exactly
it's a
right.
bad, yeah, it's a bad situation to be in this year, but you have to make the best of it, and really think smart around how to manage, because this can save you thousands and thousands of dollars in taxes for sure. Okay, so I have a lot of questions here around the product and where you guys see this going. All right, so first of all, I want to talk about a lot of the Binance Smart Chain. Now, last year, some of our users were using crypto. I think it was CryptoTrader.tax at the time, and there was a lot of issues with bringing on, tokens that are way, way down in the list. We won't call them, but the crap coins, and trying to get in and bring those into the platform. A little was, obviously for many reasons. Has that changed now with being able to bring in those kinds of assets into the new CoinLedger?
Yeah, a lot of that has seen dramatic improvement. It's always going to be a challenge in for our engine to price very low liquidity coins,
Yeah,
right? But there's been a tremendous amount of infrastructure work that we've done over the past, call it 6 months, that will, solve this problem for 80 to 90% of people who had any issues last year.
yeah,
So if you experience any additional issues, just reach out to our team, and we love hearing from you because then we can go fix them.
yeah.
But yes, a lot of that has improved.
With that being the case, there's new IRS guidelines, new tax law coming out, to where most likely we'll see exchanges having to do reporting, much like what you see with your investment products out there, whether you're Fidelity or Schwab or whatever. You get forms that are going to get submitted to the IRS, obviously, and you get those forms so you can build those into your taxes. When that occurs on the exchange side, because that's not required of the exchanges right now, how will that affect what you guys are doing? Will you be able to augment and really build in some more synergies with what your service does along with some of these exchanges?
Yeah, so this is the big shoe to drop in the world of crypto taxes is once these exchanges start by law being required to send 1099s to every single US taxpayer on their platform, it's going to skyrocket compliance. And how
Yeah,
CoinLedger work is we're already pulling in this transaction data directly from the
yeah,
exchange. It's just now the IRS will also have a copy of that data.
yeah,
And so you, the user, will be in more of a position where like, oh shoot, I need to report this because the IRS knows about it. Obviously, you should be and are required by law to report it, even if you don't receive a 1099. But it
hmm,
is going to increase compliance, and of course, that's the government's goal.
yeah.
CoinLedger will work pretty much no differently. We will, like you said, import that data in the same way, and that data that is imported will match what's reported on that 1099, but from the
Yeah.
exchange.
Yeah, and I think this is something that, to me, this is a good thing for crypto, because for crypto to really scale to the next level, mass adoption, this has to occur. And, it has to become a grown-up business, and grown-up businesses pay taxes, and people pay taxes, and you go through this whole process of really understanding. So I think that's a good thing in the sense that hopefully this is going to give some regulatory alignment, which then is going to give DC some benefits over there. Obviously, now we're collecting taxes on this stuff. We might as well regulate it in the right way. And I think those are the things that we'll continue to see coming into this space. Let's talk about bot trading. So, bot trading, we run bots on Pionex.us. I like it. But when I look at the amount of transactions, I mean, I am shocked at how many transactions a bot is making in these just, high fractional reserves. I mean, they're just really genning out a number of transactions. How are you guys going to be able to keep up with that with, where you have 20,000, 50,000 transactions in a bot platform like Pionex?
hmm Yeah, so we're partnered with Pionex, so we handle tax reporting for a lot of Pionex users. We've invested a lot of money in our infrastructure to make sure it can scale with the volume, that comes with the cryptocurrency territory. Now,
Hmm.
as you mentioned, it still will get more expensive because our pricing scales with transaction volume,
Right.
and that's just the reality of our business, and people should be aware of that. But from a technology standpoint, we can support, tens of thousands, hundreds of thousands of transactions tracking in CoinLedger.
Yeah, and that's something to think about for you guys if you are looking into bot trading is, just even though there are benefits to bot trading, but remember just the transaction flow the
Mhm.
ability to keep all that data in a place to where, you can measure it and eventually account for it is something you should consider when you're bot trading out there. So be cautious on all that. Let's go back over to your tax loss harvesting tool for NFTs, and I want to jump over to the NFT loss harvester
Mhm.
website. Um, and there's a lot of cool stuff in here. So you can literally go in, connect the wallet. You said this is only available on ETH and Solana. Was that right?
This tool specifically is just on ETH.
On ETH.
CoinLedger
Okay.
supports ETH, Solana,
And
etc.
Solana's.
But this
Okay.
tool was just launched to the Ethereum blockchain to start.
Okay. All right. And I'm assuming there's going to be plans to move some other chains in here.
Yeah, it depends on what demand looks like for the service. So
Okay.
if people really use this, we're happy to build it on Solana as well so that people can, again, harvest their worthless NFTs on Solana. You can see that we launched this a day ago and over
That's going to go
$15,000 of
up.
losses have been realized. So that's in a single day. It'll continue to go up as people sell their worthless NFTs to the contract. Again, that's real tax savings that people
Yeah.
aren't having to pay in taxes now. So it's fun. It's meant to be fun. It's meant to be jokey, but it's a serious
Yeah.
product that people are using and getting benefits out of.
Well, hey, listen, it's serious when you went out and paid $1,000 for, let's take a look here for, this donkey right
Right.
here. And,
Right.
that I don't know if that project went away, but if the projects have gone away, obviously we're dealing with a situation where we have to figure out how to get that $1,000 back. David, when you look at strategies and how tax loss harvesting, obviously a pretty common strategy. It's used across all industries. This isn't a crypto thing. This is a all industry thing. What are some of the things that you guys are seeing? Because obviously being in the space, understanding and having the amount of customers, because that creates problems and challenges for your platform. What are some of the things that you guys are watching for right now to, one, build CoinLedger to continue to get better and even more efficient? But what are some of the things that you're finding right now that are creating, maybe challenges for the future?
Mhm. Yeah, one thing we want to improve within our tax loss harvesting module. So right now we will show you what is the current market value of coins in your portfolio
Okay.
versus your cost basis, which will show you what assets are underwater, aka where you have opportunity for tax savings.
Yeah.
We want to break it out even further and build in kind of scenario planning so that within the CoinLedger UI, you can um, create a fictitious trade to show you exactly how much tax savings you'd get by, executing a market sell
Oh,
of
that's
Bitcoin that
interesting.
is currently
Yeah,
underwater, and
that's
just
a
give
good
more
one.
people tools to show the real world results of doing XYZ transaction based on the status of your portfolio. Um, there's infinite amount of tooling we could build to continue to help investors better understand how to optimally position themselves from a tax minimization perspective. But at its core, it's really a function of what happened in the market any given year. And we
Yeah.
are, again, like I said, in this perfect storm where there is likely a lot of gains realized from some number of people, right?
Hmm.
And those people have an opportunity to offset those gains, which capital losses offset unlimited amount of capital gains
Hmm.
in the same year. So like if you
Yeah.
realize $50,000 of gains in the spring, you could go harvest $50,000 of losses, and now you have $0 of taxable capital gains, which
Right.
depending on your bracket could save you like $10,000-$20,000. So
Yeah,
interesting stuff.
there's big numbers here. I'm curious when you mentioned this tool set to be able to establish value on these, because there are scenarios, especially we'll go back to self-custody for a moment. Asset is purchased on exchange one. It's then moved to a ledger. Asset is moved to chain or to exchange two, but not sold, then moved back to a ledger. So being able to understand that blockchain throughput and traffic, is CoinLedger capable of understanding that so it knows the original purchase price, where this asset is now being held, maybe it's moved and returned, there's been activity on it. How is that traced inside of CoinLedger?
Yeah, it's a great question. So what we do, as I alluded to, is you have a universal asset balance in CoinLedger for any asset. So if we detect that you have a buy in Coinbase, that will increase for Bitcoin. That will increase your universal asset balance for Bitcoin in CoinLedger, and you'll have
Okay.
basis in that asset. Irrespective of where we detect that asset gets transferred, you still have a universal balance of the asset. So until we detect a disposal event, a sell, a trade of the
Yeah.
Bitcoin, doesn't matter where it is, we will report your universal asset balance,
Mm.
if that makes sense. And again, because all transfers are treated as self-wallet transfer, you sending your Bitcoin, us detecting a withdrawal or deposit from a ledger is not going to deduct against the universal balance of Bitcoin that CoinLedger
Okay.
has in your
Yeah.
account. And
Yeah.
so it really doesn't matter how many places you move it, as long as you didn't dispose of it, aka sell it or trade it on
Right.
any platform, you're always going to have a universal balance that we're tracking with basis on that asset.
So that gets back to your point on the basis value of that asset. So when someone could take a look at it and says, okay, this is my current position on Bitcoin or Ethereum or whatever, that's my basis. So I'm going to understand if I should take maybe a tax loss harvest or just let it ride and continue on down
Exactly.
the road.
Yes.
Looking at your website, looks like you guys have, I don't know, man, hundreds of integrations now. I mean, pretty much everything that I've seen or used seems to be in there. Are you continuing to get requests for new platforms?
Yeah, so we cover over 500 different exchanges, wallets, blockchains. Where we continue to see requests is always how the market moves. So if people
Yeah,
start using some new blockchain, we're going to go integrate with it. So where our focus right now is actually different geographies. So we're integrating with more exchanges in India, more exchanges in Canada, more exchanges in Europe. We have very deep coverage in the US. From the blockchain side, more integrations with core blockchains themselves, Arbitrum,
right.
Optimism. So there is a never ending amount of integration work from our team, and we have a big team that's always crunching those out. But yeah, we do support a lot, and we support, what most people use already.
Yeah, I think this is going to be an interesting thing with some of the consolidation. Obviously, many of the platforms that went down this year brings me to my next questions, and that is losses. And there's two angles here. One is you're a Celsius customer, you're a Voyager customer. Now your assets are essentially out of your control. Not tax advice here, but how are you seeing users trying to handle those kinds of situations? Because I'm getting different
Yeah,
feedback from different advisors.
right. So the number one thing I would recommend is speak to your advisor, because every situation is slightly unique. So there is no perfect silver bullet. But the tough reality is, if you have assets locked on Celsius, Voyager, FTX, and you don't have the ability to access them, you can't write off it write it off as a loss, because you actually haven't lost it yet. You could get some amount back,
Mm-hmm.
and you will realize the capital loss once you receive the amount back that you get. So if you had 1 Bitcoin on Celsius and you get zero point 0.2 back, at that point, once you get it back, you can write off the capital,
Right.
the
The
loss.
good
Now,
the
the
good
downside
thing
is
is
this could happen years and years from now.
yeah,
So
exactly.
investors are in a tighter and tougher spot because they want to realize tax benefits today, but it's likely, they're unable to do that until they definitively, have the results of what they're going to get back or not.
Yeah, and I mean, they're essentially, if they were in a positive position, they're not going to be able to receive, sell anyway to yield capital gains. So it's not as if you're getting capital gains on top of that and having to deal with that.
Right.
What about the issue of just pure theft? Your wallet got hacked, your MetaMask. This happened to me this year. Had a MetaMask hack that occurred on one of my own accounts. And are you finding users dealing with those kind of situations?
Yeah, so these are also situational. So within CoinLedger, you can mark assets as theft casualty losses,
Hmm.
investment losses. Now, depending on the nature of the hacker theft is going to determine whether you want to classify this as either a casualty or an investment loss. We have detailed blog articles discussing how these situations are handled, but the tax code is nuanced here. Some hacks are not tax deductible. And so if you have a very meaningful loss from hack, theft, fraud, you'd be wise to speak with a tax attorney who can advise you on, yes, we can deduct this
Yeah.
for these reasons.
Yeah.
CoinLedger, of course, is just a platform that will calculate it for you, but we can't tell you what you should classify something as.
Yeah, and that's one thing, takeaway from today's episode is, first of all, find yourself a good CPA. You should be doing that anyway. And if you're investing your crypto to any level, you should consult a tax attorney. In many cases, they're not as expensive as you might think. I know a few that we've used in the past, and it kind of surprised me that they weren't as bad as I thought it was going to be. But it did help me a lot in understanding a lot of the tax law as it relates to crypto, because it is a constant, ever-changing scenario right now around this. And in some cases, you really kind of have to balance it, obviously, with your individual position out there in crypto for sure. David, always fun talking to you, and congrats on everything you guys are doing at CoinLedger. I'm a happy customer now, and I'm going to continue using this, and my CPA likes it, so that's the good thing. It's a lot easier for him to figure it out. Any plans to start connecting?
Thank you for having me back.
Yeah, just last question. Any plans to start connecting with CPAs and advisors out there to really kind of, amp up that connectivity ability?
Yeah, we have deeper plans to better our suite that's kind of meant for accountants who maybe have many clients. And that's currently in development. So you'll see more changes in the future, tightening that feedback loop.
If you guys want to learn a little bit about CoinLedger, just go to coinledger.io. You can check out their website. We'll leave a link in the description down below as well. It helps us out. And again, thanks for stopping in today, David. Appreciate it.
Yeah, thank you, Paul. Take care.
You bet. All right, so you guys, as always, the number one thing you want to do here around things like this, when we go into these more deep dive things around, these things, is always consult professionals, and whether that's a CPA, a tax advisor, a tax attorney, those kind of things. And if you are, hey, listen, if you want to do it yourself, you want to get into TurboTax and those kind of things, just remember, you really should take as many precautionary steps as you can take when you're dealing with something as critical as your taxes, especially around crypto. All right, so if you guys are not part of the Diamond Circle, make sure and get into it. It's our free member tool. We add additional content. We have a whole tax planning and prep guide that's going to be dropping here this month and next. Diamond Circle members will get, a huge discount. That's one of the big advantages for that. If you're a mastermind member, it's actually a part of your service. You get a lot of our guides and some of our additional tool sets, but it is a free service for you guys to sign up. We just drop you news, information, all that kind of stuff on a weekly basis. Of course, if you want to reach me, it is out there on Twitter @Paul Barron. We'll catch you next time right here on TechPath.